world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, FinTech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're thrilled to be joined by Nigel Verdon, co-founder and CEO of Railsbank, an API layer connecting fintechs to a wide range of banking and payment services in 5 lines of code. Nigel is a pillar of the London fintech community. Prior to founding Railsbank, he co-founded and ran CurrencyCloud, an API-based FX and payment solution, invested as a venture capitalist at Orange Growth Ventures, advised startups in the UK and Europe, and traded FX at Nomura and Swiss Bank. Banking as a platform is regularly cited as the next phase of financial services evolution, and Railsbank is operating at the cutting edge of that trend. As always, connect with us on Twitter, Facebook, LinkedIn, or on our website at bankingthefuture.com. If you like today's show, please subscribe on iTunes or your podcast platform of choice and leave us a review. Thank you very much for joining us today. Please welcome Nigel Verdon. Nigel, welcome to Rebank.
Thank you. I'm glad to be here.
You have a stunning range of experience across hard tech, capital markets, investment banking, venture capital, and fintech. What's your view of fintech and the broader evolution of financial services, and where are we going on the fintech journey?
Well, fintech, I think we've only really just started the journey. There's been a lot of change from the banking world, thanks mainly primarily driven by 2007, 2008. And very much more regulation being pushed into the banking world and the real comprehension of the economics of banking. There's a lot of G10 banks. Generally for smaller customers, your acquisition cost on retail is $350 and lifetime value is $250. So the economics of smaller banks, smaller customers just doesn't work unless you're lending to them. So I think the fintech revolution is really only just started, and it's primarily driven by economics as a prime mover, and originally a sort of pushback against the banks, but I think that's primarily over. So fintech is really a change of the value chain of financial services, so that the value chain of financial services for small to mid-size banks and other organizations in insurance, servicing small to mid-size customers is able to be done economically, because the value chain, if you've got bank as a wholesaler and fintech as a distributor and product guys, and put those things together, if you look at the economics, it means for a retail customer, bank can acquire an account at $4 and make lifetime value $40 to $50, and the fintech company can make money in that as well. And suddenly you've changed that to $350, $250, $100 loss per account into $40 plus profit per account in a bank. And the reason that's done is the outsourcing of the product and the customer acquisition is done to specialists who really know how to target their customers and really know how to give product aligned to their customers, and uber focused that a bank never will be. And if they work together harmoniously, that we believe is the future of financial services for small to mid-sized customers. We don't see fintech is really going to affect larger bespoke relationships. For example, large UK bank and Vodafone, that's always going to be a bespoke Savile Row type relationship. But the Marks and Spencer's pret-a-porter, ready-to-wear relationship, I think will radically change through to fintech.
Mm-hmm. No, I think it's a really interesting and concise way of looking at it, because I think that all through the 90s, I guess it was all about consolidation at banks, and even banks plus insurance companies. You had things like Citigroup coming from the merger of Citibank and Travelers, and the view was kind of that the only way to achieve economies of scale was to do everything kind of on massive scale. And what you're saying now is that there are certain things that should be consolidated, and it sounds like some of the back-end stuff like payment processing and even some of the product management, the core banking components, but that a lot of the user interface, the customer-facing piece, and the customer acquisition piece can be best done by specialist, almost layers sitting on top of that core.
Yeah, absolutely correct. It's especially for standard product. I think you'll also see a shift in why do banks try and differentiate on a current account, because a current account is a current account. Faster payments are faster payments. There's no more whiz bang in there. So I think we'll also see a utilization, which is a horrible word, of just core banking at the back end too. So why don't all the UK high street banks just have a current account utility, for example, and distribute that out to the fintech world? So you get this concept of utility banking as a new P&L within the banks. And so you've got utility banking, profitable retail banking, profitable corporate banking, capital markets, wealth management, investment banking, etc., as the P&Ls. And if you look back to the whole bank assurance thing, I think the reason that primarily failed is banks, insurance companies, and financial services across the board got in the mindset of shifting product, not understanding customer need and customer lifestyle. And that's another shift of what the fintech world has done. They don't really shift product. They say, how can I help your lifestyle? How can I help you? And these are products that I can fit into that experience to help you get there. So they don't say, you need a mortgage. It turns their conversation on its head to say, I'm looking for somewhere to have a roof over my head that in certain areas that allows me to feel happy. They sell you happiness as opposed to sell you a product to give you a mortgage. So that fundamental change of how to sell product and align it with customer is, I think, one of the main reasons that whole bank assurance experiment failed. It was all about you need a product, you need a product, you need a product, you need a product, regardless of what you're actually doing as a human being.
Do you think it will be difficult for incumbent banks to get to this model that you're talking about, given existing cost structures?
Yes, it'd be very difficult for them to innovate, even though there's lots of innovation going on in the banking world at the moment, because fundamentally you don't want your bank to innovate. You want your bank to be safe and secure and look after your assets and have real capabilities there. Too innovative, you think, is the rest of it safe and secure? Is the asset liability management on a balance sheet correct? Or is this bank going to be a bust because it's got not very good loans on the balance sheet or can't even originate loans? So I think the fundamental thing is banking is about safety, and that's what we pay for and trust. And therefore, the trying to innovate too much, especially on new products, new areas, etc., I think it's very difficult for banks, especially on the lower, sort of less, more marginal customers. So changing that on its head is make a utility either of the banks together or utility banking within a bank to do what you're very good at, which is custody, safety, wholesale, and you've got rails existing onto all the payment schemes, everything else already. Why not let the others do the innovation and build up customers to a point where they do need to get fully banked to be able to get the full product set, etc. They will need more sophistication. Whereas a bank fighting for the smaller customer at the bottom end, which is a non-profitable customer, is never going to be successful. And we really don't want our banks to innovate too much. Look at what happened when they innovated in products and CDOs, etc., and then hid all the risk, etc. We don't really want a lot of innovation either.
Well, it's fascinating to think about. So in this model, you talk about the importance of bank stability being so key from a customer standpoint, because naturally if you have your current account with a bank, you have your deposits with a bank, you don't want that bank going bust, because despite national government deposit guarantee schemes, it's still a headache to get your money out. Certainly if you have more than the deposit limit, you're in trouble. You're almost in this model separating kind of the net interest margin component, the deposit taking and lending at the bank level, that utility business and the transaction banking, from the customer interface, customer interaction layer, which would potentially in this case provide the current account. And you would almost have, sounds like, a range of banks in the background that are supporting the transactions running through that current account. But the quote unquote current account provider in that scenario wouldn't actually be taking credit risk through lending, and therefore would potentially be more stable in terms of actually providing that service of current account to customers.
Yeah, you've got current account wholesalers, and they may or may not wholesale lend that credit out. So if you've got a sort of utility for current accounts, and current accounts don't make money whatsoever, but if you're able to wholesale that out instead of to each individual customer, you've got fintech loan originators, sorry. If you've got loan originators that you can fund under certain well understood criteria, your risk management scope and your risk management level of expertise and complexity can radically be reduced. Instead of managing a loan book of 10 million loans, you're managing a loan book of 1,000 loans, of which you get a lot more insight and a lot more safety and a lot more portfolio management in there, rather than just hoping to spray and pray millions of loans generally look like this, and therefore my default ratios tend to look like that. With 1,000 loans, you can manage at a much clearer basis and manage a micro basis, especially on where you can tweak it from the default rates, etc. So I think it gives a more robust mechanism for handling large volumes of customers, which, to be honest, unless you're massively analytic, like something like Capital One, you're not going to be able to do within a bank at the moment with your current systems. Then focus for larger customers on good old traditional lending, where you really do get to understand and know the customer for larger Vodafones, etc. So put the real, because where the fintech world, especially on the lending side, really understand customer, they really do understand customer. They've got very advanced analytics, and it's almost doing what the bank manager used to do in the old days, is to say, do I want to lend to this person? They're using analytics to really ask that question, where I think that's fairly lost within the banks these days, except for another model like Handelsbanken, who do go back to traditional bank managers who make the decision, do I want to lend to you or not as a human being? And that's old school banking, which is very difficult to replicate because it's expensive. And if you're a Handelsbanken customer like myself, you don't mind paying that because you want to talk to a bank manager. But when you're trying to do mass market, you can't have that conversation as a bank. So why not outsource that and then control the warehousing of the risk and the wholesaling of the risk to people who can distribute it and know the customer a lot better.
So where does Railsbank, your current venture, fit into this?
Railsbank is, I've been talking a lot about retail banking. Railsbank is trying to change the world of transaction banking. We're building a global transaction bank without actually being a bank. So we're achieving that by connecting together a network of banks through our platform, which is a digital ledger platform and transaction platform, and giving access to global banking of 5 lines of code. Now, what does that really mean for customers? For customers like e-commerce merchants, like fintech companies, when you're trying to grow cross-border, access transactional services like creating bank accounts, receiving money into them, sending money from them, etc., getting IBANs in real time, is an absolute pain with banks at the moment. It can take you 6 to 12 months to connect technically, and it can take any time to get your bank open from 3 to 12 months to even get an account open. I've got many use cases of that. We changed that radically to be able to access the API and the tech within minutes, so you can be up and running, as I say, in 5 lines of code, doing the very basics in under 5 minutes, and then connecting up to be fully banked and having an account open, etc. So you can start doing business. We tried to do that in between 5 days to 3 weeks, but generally we get it done under 5 days. So we're totally changing the landscape of the speed to be banked, the technology to be able to get using and integrate it to your bank, and then from a pricing side, we're taking the approach of AWS and radically going to change the pricing so it becomes utility pricing. So essentially, we become the AWS of banking.
I've heard Railsbank described as a bank as a platform. Do you agree with that description?
It's a platform that gives you access to banking, and if you decide that's the current definition of banking as a platform, yes, we are banking as a platform. What we're not is PSD2. PSD2 is a fundamentally different business to ours. PSD2 is about giving access to my retail account at an existing bank and allow me to get data or initiate a payment from my existing account as a retail customer. We're about wholesale transaction banking. So if you went to global transaction services in JP Morgan, Morgan Stanley, into not so much Morgan Stanley, into Deutsche Bank, all those large transaction banking businesses, that's where we position ourselves, rather than retail banking, PSD2.
Let's go deeper on Railsbank. You say you offer fintechs access to banking and payments in 5 lines of code. What is it that fintechs need, and how does Railsbank deliver that?
What you need is, I'll use some use cases. A invoice discounting business based out of Spain wanted to go live and have bank accounts to receive their customer money into, so they could lend against it, receive the receivables, and finance that, and then take those and pay down the loan. So that particular company took 12 months to open their bank account with their bank. And it took them during that time 6 months to get the technology connected between the two, because the online banking platform was CSV in, CSV out, so it was operationally difficult. For us, the value add we give is the technology is connected literally in 5 minutes. You can be up and coded in a week and be doing real meaningful business on the platform. And we'll have your account open, depending on how complex it is, from 5 days to a few weeks. And that radically changes it for the fintech. Now, if the fintech company then wants to go to another country, they have the same problem again. With the Railsbank, we just switch them on with our partner in that country, switch them on the partner in that country, etc. So it's much easier through one API to grow. The other advantage is Railsbank is all based around a bank account. So the fundamentals of it is money in, money out to a bank account and a running balance. And money in, money out can be in money forms. It can be a payment in through bank transfer, can be an acquiring revenue coming in through credit card or debit cards. It can be money going out via bank transfer or money going out by direct debit, or other mechanisms to be able to do that. We're also going to put a currency exchange piece by working with currency partners on the back of it, and eventually go into credit, where we match credit distribution with credit wholesaling as well, all through one single account. So the real benefit is you've got one API to access all the different banking services you need to grow a fintech business on top of. And it's based on experience of myself at CurrencyCloud, all my colleagues in this industry when we did like FinTech 1.0 back in 2011, 2012, and the media started calling it FinTech. And on a lot of the use cases and needs of customers we've been talking to, prospects we've been talking to over the past 3 or 4 months, which have pretty much said, that's the infrastructure I want. I don't want to worry about the banking layer, but trying to get hold of banking layer through an API has been next to impossible to date, and wholesale banking through a banking layer. So it's really about speed, access to banking, going global, growing your business. You concentrate on your product, we'll just concentrate on making the banking piece work for you.
Well, one of the things I love, you talk about fintechs being users of this. Banks themselves could be users of this. Smaller regional banks who are looking to expand into new geographies. It sounds like immediate access to a range of products that they would otherwise have to build and get regulated for themselves.
Yeah, fintech is one small market that we're working with. The other areas is other financial services institutions, where we can give a slightly different relationship than correspondent banking. We can give a more product relationship, because correspondent banking has all the issues with compliance, etc. We work with e-commerce merchants, so receiving capabilities and then aggregating and paying away. So there's a whole lot of use cases when you expose a bank account through technology to companies for accounts receivables and payables, which essentially it all is, and allow you to integrate super fast to do something with that. That then opens up the mindset. So we look at it giving us sort of APIs that people can go be creative and create products we've never thought about yet, integrate into accounting systems and other platforms, ways we never thought about, associate cards with lending at point of sale, for example, so a debit card automatically lent into by a short-term lender. So all sorts of new products, that's where we're looking for the platform to be. And a fundamental piece we haven't discussed so far is embedded into our platform is what we call a compliance firewall, which works like a Cisco network firewall to stop bad packets coming in. It works to stop bad uncompliant transactions happening. And it does that. We've worked out a very smart way of taking a compliance manual, codifying it into a set of rules and data, and we're applying AI to that later on, and making sure every transaction on the platform has to go through the compliance firewall. If it doesn't comply with your compliance manual, it gets quarantined. By doing that, we take compliance to a different level, so it's embedded in the banking system or banking platform that it's very difficult for the current systems that a lot of the incumbent banks sit on top of, who are using sticky tape to put compliance on top of systems that were developed in the sort of 1980s, 1990s, some of them in the 1970s, so which weren't designed for compliance, to be honest.
Where are you in the journey? And what does roadmap look like? I believe you guys launched earlier this year. Is that right?
Yeah, we launched the API sandbox earlier on this year. We have our first live customer going live on 22nd of this month. So we're super happy about that, and just watch this space soon. And we've got a range of prospects all ready to go live on the platform. So we've been doing live transactions for the past month and testing and making sure those work. And our first customer will be going live doing proper live transactions, as I said, 22nd.
So when you say customer, you mean FinTech or financial services user of the platform?
Correct, yes.
So there is at least one, if not more, banks that are currently connected
Sure.
to the back end?
Yes, we have Crédit Mutuel Arkea is one of our banking partners, and they provide Euro bank accounts and then money in, money out, primarily via SEPA. We have another e-money license provider on the platform, and they provide sterling accounts and sterling in, sterling out, and providing multi-currency in and out as well. So, and we're adding more banks, and you'll see announcements at Money 2020 in Copenhagen of more banking partners announcing joining the platform then as well.
So it sounds like an interesting revenue stream for some of these existing banks as well. Banks who otherwise would be serving local markets, and now they can be effectively reaching large volume customers that may be even based in different countries.
Sure. It's accessing new markets for them, but also handling a lot of their compliance risk for them, because they ordinarily wouldn't want to go into those markets or handle those extra volumes because the compliance processes may not be there. What it also gives is a local regional bank on the platform generally will lose their customers once their customers start going more global and trying to, for example, with the UK High Street Bank, then saying, I want an account in Germany, I want an account in Italy, I want an account in Singapore. The bank will say, well, I can't really help you. Here's a partner bank over there, but as we all know, partner banking just doesn't work unless you're Vodafone or somewhere. So what we do enable is one of our banks on our platform can say, go talk to another bank already on the Railsbank platform, we'll connect you up there. So the regional bank, local bank does not lose their customer. They continue doing their transactions, and the other partner bank we have on the platform starts doing the transactions over, say, Singapore, Germany, Italy. So we create it creates the experience for the customer of like an HSBC or Citi through one API, as opposed to having to try and find all these relationships themselves on that.
And what does the ideal bank partner look like for you guys? Is it HSBC, who has a branch in every country in theory, or is it smaller banks?
It's our ideal banking partners are small to mid-sized regional local banks who have a mindset of doing something digital and have a mindset that they understand they're sitting on rails, that they can leverage and make transactional revenue out of their rails without chewing up any balance sheet, and it's non-balance sheet business for them. So HSBC is essentially what we will replicate, because HSBC is primarily just 50 banks with one logo over the top who all work primarily independently over different platforms, etc. We're trying to give commonality across the set of banks, that the customer experience is one platform. Behind the scenes, there may be multiple platforms. Unfortunately, with HSBC and others, your customer experience is of 20 to 30 platforms and one logo and 20, 30 different relationships. And we tried to execute that before. And I know a large search company, when they launched their wallet business, tried to do it with a large US bank, and in 18 months couldn't get any accounts open or anything. So the fundamentals are they have the infrastructure, but it's all about the customer experience, and hiding the legacy is what we're about. And I think that's why we can compete with an HSBC going forward.
In terms of hiding legacy, is the platform API in, API out, i.e. do partner banks connect to Railsbank via API in addition to you serving an API to fintechs?
At the moment, we're serving an API to fintech. Our integrations are each custom-made at the moment, and they're for custom-made per bank. We're working on, and this will be 2018, so it's a simple connect, because we'll then have understood a lot of the use cases of the different file formats that are used, the different platform integration points, etc. Our goal is to be API in, API out, but realistically, trying to try that, we've been spending a huge amount of development work trying to develop an API in to handle all these different use cases, rather than understanding use cases and then building the API on the way in. So there are some APIs for partners to enable, so there's a limited set, but the main integration is using their existing infrastructure.
Mm-hmm. No, and that I think may have been my expectation. One thinks about existing banks maybe being less technically ready for cutting edge platforms like yours. I mean, going forward, do you expect that to be a friction point to bring new bank partners on? Is it how costly and complicated is it for you guys?
Most of them have a similar use case, which is they send files here, you pick them up, process them, do something, send them back, and that is how most transaction banking APIs work. So we have that pretty much codified, because that's how we work with current banking partners at the moment. So when you say the API in, API out, what we're trying to do is abstract it. So we have a standard layer in, and we just write adapter for each bank. So the level of complexity for each bank actually goes down. And the reason is each bank, bizarrely enough, even though Swift messaging is a standard, Swift messaging is a standard that's not a standard, because certain fields in the Swift messages, it's the same field name, but the content in there can be different depending whether it's Barclays, Bank of America, Merrill Lynch, Deutsche Bank, etc. So you still have that piece of translation that you need to do, which is why a lot of the Swift bureaus, etc. exist.
One of the most innovative components of the platform, I think, is definitely the compliance layer, which you mentioned before. When you first told me about the concept of that compliance firewall, it seemed astoundingly complicated, meeting the requirements of every product and transaction for every bank on the platform. I think when you explained it as a logic layer, converting those compliance manuals into logic, it started to make much more sense. How effective is that layer in doing what it's supposed to? Because I would imagine that that's one of the core conversations that you're having with bank partners.
It's really scoping taking the scope down to certain parts of compliance and certain transaction types and product types to limit what part of the compliance manual we're dealing with. Because, for example, lending, we don't touch any of that. Treating customers fairly, that's not our place. So just purely on the transactional pieces. And when it's a transactional piece, the policies are quite clear. They're normally an if then else. And if you look at policy and take out a lot of the legalese, it does boil down to primarily an if then else. And if you can do an if then else against data and against profile and against expected behavior, you have something that's codifiable. That takes a lot of experience and grey hair and knowing how to translate between legalese and if then else, and that's primarily because of our experience of the team and in the markets. That's where the real expertise has been, and then the data sets. And once you've got a compliance manual that's live and active, as opposed to a PDF in a drawer, which majority of compliance manuals are, and when policy is updated, it's updated in a drawer, not on the platform. We look at it as a live compliance manual that you hit print, or you call the API endpoint to print your compliance manual. That's your compliance manual. It's there, active, live. That's all the data on it. Update that. Bingo, you're live with a new platform. And also taking it into a logic layer, you can then comply with different regions, because you can put logic per region, logic per customer type, logic per. So you can put a whole lot of more richer ways of expressing things from the manual into reality and comply with local legislation. So the language we base it on, our whole platform is based on AI-based language, and that has the extension of that is the language to express compliance manuals in.
And I guess that requires FinTech customers of the platform to be keeping good records, and being clear about which types of customers are engaging in which types of transactions. I would imagine there's responsibility on the fintechs as well.
But fintech also configures their compliance firewall, and that's why our banking partners like us. The banking partners have a compliance firewall that they configure, so what business they want. And then the fintech company configures their compliance firewall as per their compliance manual. We help them do that. And they can prove to the banking partner, I'm actually doing stuff that is compliant with our manual and what we agreed between our business relationship. And that's the first time that anybody's been able to do this primarily in the world, because generally banks don't trust the fintech companies because they don't have the experience in banking, don't have experience in compliance, they don't trust that they've got the right controls in place. We enable that, and we can give real-time audit to the banking partners should the fintech company give permission to their banking partners to audit. So we really do change the relationship in compliance to being one of trusted and visibility than one to default, we don't trust you because you haven't been doing this long enough, and who ends up with a fine? The bank. So it's fundamental that if you're going to have banking as a platform, you must have compliance baked in. Otherwise, it's just a bit of tech, but doesn't actually change the industry. We're very much about changing the industry.
Expanding the conversation slightly more broadly than just Railsbank, I think about openness in general. You referenced PSD2 before, kind of moved toward open APIs. A lot of the banks I talk to are concerned about openness because they view that as a security risk or a vulnerability in a lot of ways. Things like ensuring compliance, but also ensuring control of access to important systems like core banking, for instance. To what extent, in your experience, are those concerns by banks well-founded? To what extent are they steeped in a bit of legacy mindset?
There's a bit of 50-50 on that. There's a lot of legacy mindset going on because there is quite well-founded fears that our internal system's basically safe enough to expose. And if you look at the amount of issues a lot of banks have had, they can probably quite rightly say they're not. So there is concerns there. Saying that, banks are trusted, so why don't banks go into the business of security instead of trying to make money out of a banking product? Current account plus security equals a chargeable entity. That's something different they could charge for. So I think some of the legacy mindset is out of I don't want to give somebody my information because they can make advantage out of it. That's a sort of fear side. Because I've spent a huge amount of money acquiring this customer, I don't make money out of them, so I'm not going to give you the data anyway. Well, in the real world, if you gave the data, you probably make more money out of them because you can charge for that because you're not making out the account. So it's really changing the world of closed walls, closed garden, which was traditionally the banking industry, into an open world and working out sort of how other business models are based totally on openness and safety and reasonableness in terms of sharing data to make money in a different way. And I think we'll see as this, I think it's a very smart push to opening up data, opening up APIs, because people need to have a different type of conversation with their bank and different type of apps. And if the more open mindset guys look at what Steve Jobs and Johnny Ives did with the iPhone, they said, here's a set of APIs. Okay, we have no idea what apps people are going to build. We'll give you a mapping app, we'll give you a bit of email, we'll give you this, we'll give you something that plays music, and we'll give you something that's got an accelerometer in here to do something with. Go figure. And you look at what's happened in the App Store world, there's an immense amount of stuff and inventions and creativity that's gone on that we never thought we'd have when the iPhone first came out. And they did that by being open. And so if the banks are in the mindset of being open, I think you can create a massively sort of different world for banking. And I think the real challenge out to the chief execs of a lot of the banks is how can I capitalise on this? And I think it's quite telling the number of banks that don't have a proper digital person on the board are the ones who are scared, and the ones who have a digital person on the board aren't scared. And it's very binary on that. So I think there is a massive shift, and the shift, the ones against the shift are primarily driven by good reasoning and safety and the role that banks play as custody and safety in the world, but out of being scared because they don't know what to do. What does digital look like? because primarily it's been a numbers-based business. But the world has moved on, I think, and finance and will continue to move on.
I'm curious to pick up on something you said in passing before, which was around your personal relationship with Handelsbanken, which is a Swedish bank that's been operative in the UK for, I think, close to 20 years now, has had phenomenal success. It's basically a branch-based model with distributed decision-making to effectively the branch managers in those branches. High touch, it's focused on businesses, right? Small and medium-sized businesses. It's interesting that you, being so prominent in fintech, automating a core piece of the integration between existing banks and fintechs, are nonetheless, I guess, from a customer experience standpoint, implicitly supporting a relationship-based model or some sort of human component. Sure. Would you like to talk about that?
Sure. I mean, that's to say, if you segment banking into utility banking, which is serve everything through the technology and API, which is a fintech world, and it's to a certain type of segment of customer. I'm not that segment of customer. I've lived between two countries and have a fairly complex life, and somehow Handelsbanken serves me very, very well on that. So there is still a need for a segment to go and talk to a bank manager where the computer doesn't say no. The bank manager may say no, which is perfectly reasonable, but they've actually looked at your situation, you as a person, looked you between the eyes and say, do I trust this person? So the interesting thing, what they've achieved in Handelsbanken is by devolving risk to the branch, and up to certain limits, they've enabled proper decision making being done in the old traditional banking world. And it's more expensive. And there's segments of customers like myself who have to pay for that because that's what we're looking for. If I want a cheap and cheerful, don't pay anything first direct experience, and I get somebody who's a perfectly decent person over the phone but can't make a decision for me, that's what I can go to my fintech experience. So it is very much about alignment, and I think where Handelsbank have been super smart is knowing where they don't do business and where they do business, and they're very, very, very clear on that. And you go into their offices, London, I know them, and the other ones around the UK, I don't know the Swedish head office, but you go and it is like going back into 1970s banking. In a good way, though. You've got experienced people. When you talk credit risk, they understand credit risk. You haven't got a kid in a branch who just puts in numbers like a postcode and says uninsurable, or no, don't lend to flats in this postcode because this postcode had some issue something centuries ago. It's very much a proper banker. So it's very segment driven is Handelsbanken strategy.
Nigel, what's the best way for people to find out more about your work and connect with you directly?
LinkedIn. I'm always open to be connected up with LinkedIn. On the Railsbank, you'll find me speaking places or in various parts of sort of accelerators and others. Just come and prod us and say hi. That's but LinkedIn or our Twitter account at Nigel Verdon as well is easy to connect to me.
Great. Nigel Verdon, thank you very much for joining us today.
Okay, thank you too.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.